Welcome to India Market Close. It's a positive day of trade this Thursday. It's also Nifty weekly expiries. The markets are trading positive, but in a very tight range this afternoon. That's the Sensex and Nifty, where off the day's high point, which is 21,700, 21,660 is what you have marginally higher on the index this afternoon. The Sensex pretty much trading with the same breadth, Bank Nifty trading in line, so no major fireworks on either of those indexes this afternoon. Let's not forget the market participants will largely be on the sidelines. We kick off earnings season with HDFC AMC just reporting its numbers. You also have the two tech heavyweights that will kick off earnings season with TCS and Infosys later today. Well, along with that, you've got the broader markets showing slight amount of outperformance. So mid-cap is up 0.6%. That's a sigh of relief. And you've also got the small-cap index trading with similar gains, 0.5% higher in trade this off. The market is mildly off the day's high. The support for the 20-day moving average is at 21,488. That, remember, was respected in trade yesterday, will remain a critical level of support for the index in today's day of trade. Well, those are the stocks on the Nifty 50. The breadth of the market is more or less half and half, like I said. Hero Motocorp, so auto as a pack is doing really well this afternoon. In fact, they have been doing for most part of the day. Hero Motors up 5%, Bajaj Auto is looking good. You've got the whole auto pack. M&M, Maruti are trading marginally higher, but the mid-cap auto names also seeing some buy in today's trade. Reliance Industries, after a 3%, almost 3% rally yesterday, is up another 2.5%. OMCs aren't doing too badly. Some of your banks are also gaining. But on the sell side, IT is looking very, very nervous ahead of its numbers. Infosys down about 1.5%. TCS is looking weak. Adani Group companies are seeing some amount of profit taking. Defenses like Asian Paints are also trading flat. It's not a bad market. It's a tight range. Traders not willing to take aggressive positions ahead of the earnings season that kicks off. HDFC AMC, like I said, has reported numbers. Numbers are a slight beat on back of which the stock is trading at the day's high point, but I guess Hersh has got more on those.
Well, yes, absolutely. HDFC AMC, good set of numbers, Samina, when I'm looking at it right off the bat. Profit after tax coming in slightly better than what most analysts on the street are expecting. Let's quickly have a look at where the stock price is at, what's the kind of reaction we are seeing, because we've just about got the numbers. But while that's coming up, we have the likes, there you go, around 0.25% higher, not much movement there, but the stock has done phenomenally well over the last year or so. If you can have that graph to kind of show as to where the stock has gone over the last year, it's done really, really well. Also, let me quickly take it to some of the other stocks which are buzzing. One is you have the likes of Polycab, of course, which has been down roughly 20% almost through the day. That income tax press release coming through with regard to the search that was conducted on its premises, that one has kept Polycab, in fact, wiped out around 15 to 16,000 crore of investor wealth. Large amount of wealth erosion. The other one is MRPL. Couple of blocks coming through as well. Solid volumes on MRPL, 18% higher as you can see. Ease My Trip, it launched its subsidiary with regard to insurance. That stock is now up 19% as we speak, doing very well in trade today as well. You had another earnings candidate, GTPL Hathway. A muted set of numbers overall. Profits came off, margins came off. And that stock, you can see pressure on 6.5% lower. Then you had a slew of updates which came through with regard to Q3. You had the likes of an Ajmera, Bank of India, Senco, all of which are buzzing on the back of their Q3 numbers. So that one. Also, we had the likes of Phoenix Mills. If we can show that stock, that's down, in fact. So that post the Q3 update, that's one of the stocks which have actually tanked 6% as we speak today. But that's broadly the stocks we have on our radar today. Samina, back to you.
Yeah, Hersh, it's an interesting day. I mean, look at RBZ Jewelers. If I can pull that stock up, it's the day's high point. Very, very solid gains coming in for RBZ Jewelers. That's the Nifty. 21,651 is what you have, and that's RBZ Jewelers. 20% upper circuit hit on that counter. Be interesting to know what's happening there. Tata Power is also looking quite good. Polycab, Hersh already mentioned, is one of your top losers in today's trade. Delta Corp, after the fall over the last few days, is seeing a little bit of recovery in trade. Abbott is up about 3% as well. So that's the market. It's suddenly giving up some of its gains. So what we've really seen over the last few days is the trend in the first hour of trading is pretty much opposite to the kind of trend that we see in the last hour of trade. Today as well, the markets opened up very euphoric. We got very solid cues from the rest of the world. Europe is also trading quite positive, but our markets are giving up gains, and it could just be nervousness ahead of numbers and the fact that you've got Nifty weekly option expiry as well. Ajit Mishra now, SVP-Research, Religare Broking, and Chokkalingam, founder and MD, Equinomics Research, joins in. Morning, gentlemen. Thanks for joining in. Ajit, what's happening on the charts? Monday, Tuesday, Wednesday, and now today, Thursday. The first hour of trade is exactly the opposite of what the last hour of trade is looking like. I believe 21,488 is going to be an important level of support. We've bounced back from those levels over the last few days. But as we go into the last 45 odd minutes, selling is emerging, and we're pretty much at the day's low point.
Yeah, good afternoon, Samina. So, Samina, it's almost 2 weeks now, in fact, rather, that we are seeing this consolidation or this tussle going on among the bulls and bears. The good part is that the bulls are defending 21,500 decisively. Intraday, we penetrated that mark yesterday, but in no time we have recovered and ended around the day's high. And today also we are seeing that despite the underperformance from the banking space, we have like select index measures, specifically Reliance, which is single-handedly helping the index to maintain the positive tone, amid this negativity. So as of now, we feel that it's a healthy consolidation that we are seeing in the markets, and on the sector-specific front, stock-specific front, there is no shortage of opportunities. If you talk about any other sector, means excluding media, wherein we are not seeing any consistency in the buying, but rest of the pack on the rotational basis, we are seeing buying interest emerging. So that is a healthy market as long as we are not seeing any change in the trend on that front, or Nifty, slipping below 21,500 mark. It's a buy and dip, something that one should definitely continue with. For the fresh momentum in the index, we need a close above 21,800 mark. And obviously, in case if it coincides with strength in the banking, that would further add to the momentum. But as of now, I feel that this consolidation will continue. So one should continue with stock-specific approach until we reclaim 21,800 in the Nifty.
Chokka, what do you think? How are you viewing the markets right now? Do you feel the uncertainty, the nervousness, the tiredness maybe is now being felt, and hence the struggle to sustain at higher levels?
Partly true, but however, I firmly believe that Sensex and Nifty will not see any major crash or major correction, rather, even in 2024. There are signs of political stability, and there are signs of India continue to maintaining a lead in the economic growth, and a lot more good things are happening on the macroeconomic front. Yes, a lot of media people are a little worried because today, the Nifty 1-year forward PE is around 40% premium to long-term average. But one has to keep in mind the fact that, you had this long-term PE average when the investor base was 4.5 crore for decades. Today, in the last 3 years, 10 crore new investors have come. They have created a vertical shift in the demand for equity in the country. So the premium itself has to, jump upward. However, I would advise serious caution on small cap segment. I'm extremely nervous on small cap segment because there are many stocks trading at anywhere 30 to even 100 PE. There are many companies which have changed the name and saw the stock price or market cap jumping multifold. That segment will dent the wealth of these new investors, and therefore there can be a possible major meltdown in the small cap segment. So this is a time to have a tilt towards large cap stocks.
Right, and any specific names, Hersh also joining in the conversation, sorry for that. Any specific names you have in mind at this point?
In the large cap, I would recommend stocks like ITC, Reliance, Geo Financial, even Nestle. These are the large cap stocks I would recommend. In the large mid cap space, I would recommend Syngene International, Honeywell Automation. These are some of the stocks in the large cap and the large mid cap space.
Right, can't help but I'll stay with you, sir. Can't help but notice no financials in the pack. That's pretty much a consensus buy in the markets right now. Any reason for that?
No, I forgot to mention HDFC Bank and small cap. We have initiated buy call on Karur Vysya Bank. Sure. It has improved Polycab asset phenomenally in September quarter, and also posted fantastic numbers, business numbers for December quarter. So these are the two banking stocks I would recommend strongly.
Ajit, I'm going to take a cue from Hersh's question on banking. How would you approach Bank Nifty? Would you consider a long here? Again, leadership or some support from Bank Nifty is going to be critical for the index to make new highs.
That is true, Samina. In fact, the only challenge that we are seeing right now in the market is the underperformance of select, private banking majors and the IT majors. So in IT, obviously, it's natural nervousness ahead of the numbers, but the mixed trend within the large cap private banks is something which is keeping this tussle on. And I feel that for the banking index to make any meaningful move, we should hold 47,600 mark, on the closing basis. Then we can see this, momentum shifting towards from sideways or negative to upward. And of course, as I said, the alignment within the private banking majors, a couple of days ago, we were seeing that SDFC and Kotak were witnessing a decline while ICICI and Axis were holding up. So this similar kind of a move that we are still seeing within the private banking majors. So until this alignment within the private bank, won't coincide, I doubt that there will be any meaningful or sustained move. So for our index, I feel that sticking with the Nifty is a better bet if somebody is trading on a short-term basis.
Right. Ajit, and your picks, if I can ask you?
Yeah, so both the recommendations, Hersh, are on the long side. The first one on the list, we have Syngene. After this decent corrective phase, the stock has formed a strong base, and it is off late, witnessed a breakout from the consolidation range. Plus, it has reclaimed the short-term averages also. So we expect this recovery to strengthen further, and 765 is what we are eyeing in the near future. So one can accumulate at the current levels with 724 as the stock. And the other name is the best performing name within the two-wheeler space, TVS, where we are seeing consistent buying interest, and a fresh breakout, a month-long consolidation zone has ended today with a very strong volume. So we expect this momentum to continue in TVS, and 2200 is something that we are eyeing in the short term.
Chokka, we were talking about this only this morning and yesterday, actually, of how with the surge in capital markets, December volumes hitting record lows in terms of inflows, brokerages, asset management companies, exchanges, transactionary advisory players would become big beneficiaries. So your CAMs, BSC, HDFC, AMC, not just because of record inflows, but also because your funds have done relatively well in the last quarter. To add to that, Angel One, which has seen record number of client families being added, JM Financial on back of activity in the IPO market. So there's so much happening in this space, right? These stocks have also ran up quite well in the last few months. Irrespective or being cognizant of that fact, would you look at adding any of these stocks which are capital market related?
No, I agree. There is a massive structural change in terms of new investors coming in. In fact, per week, it is anywhere from 8 to 12 lakh number of new investors are coming in. This is going to mean a lot for the stock market, also the players' names you have mentioned. But of course, many stocks have already discounted this massive structural change happening on a positive way. Like the BSE, we initiated around 200 rupees and recently we closed it. So I would not recommend stocks like BSE, CDSL at this point because they have run up a lot and they are fully discounted, in my view, all the good things. But certainly one can look at stocks like HDFC AMC because, if today you are at 50 lakh crore of AUM, I am sure it will become 100 lakh crore in the next 6 to 7 years. The investor base 15 crore can become 30 crore in next 4 to 6 years. So therefore, for long-term investors, this kind of AMC, good quality name matter a lot. In brokerages, I would be a little cautious because we are also into related business. We see a lot of people getting attracted by zero brokerages and moving away from the traditional brokerage houses to all firms like Zerodha. So I would advise a little caution in that particular segment.
Right. Thank you, sir, for some of those views. But let's quickly go to a stock which has been in focus through the day today. We had Polycab. The Income Tax Department came out with a press release suggesting that they've conducted a raid. They also suggested that they had roughly 1,000 crore of unaccounted sales, which they found as part of the search which they conducted on Polycab and distributors. And they found a few other nuances with regard to cash of around 400 crore, which was unaccounted. Now, the stock languishing in trade today, around 15,000 crore of investor wealth wiped off. And that's largely on the back of this announcement of this raid. The stock has been down 30+% now since the month of December. But let me try and break this down a little more. Now, typically, your tax department will conduct a search only where they believe that there is certain evidence and certain backup that they have with regard to new material to conduct this search, and they also believe that there is certain undisclosed income, and they have cause to believe that there is certain undisclosed income by the company. What happens subsequent to that is that the IT department will issue a statement or a list of files, documents that they have seized as part of the search, and evidence that they've seized as part of the search and found as part of the search. Subsequent to that, they will go back 6 years, they will reassess all the incomes and come back with the shortfall of tax. They'll add interest to it, they'll add a penalty of 50% to 200% to that tax plus interest and come out with a number. Now, 15,000 crore is a large amount of market cap to get wiped out. The tax department roughly has given a number of around 1,000 to 2,000 odd crore with regard to the numbers which they've disclosed with regard to cash which was undisclosed or sales. Now, on that, typically your tax impact ought not to be to the quantum of 15,000 crore. That seems evident. And therefore, this also seems as a bit of a sentiment reversal which has happened on Polycab, and it's somehow percolating to some of the other players as well. You have for the likes of a KEI, which is languishing in trade as well, Samina.
Right, so that's Polycab. On the charts, Ajit, you want to quickly come in? It was looking weak. We've seen a drop quite substantially even before this news hit the market today. On the charts, if you get an opportunity, would you go short on Polycab?
Shorting now, Samina, is not a prudent strategy considering that the stock has already declined nearly 30% in this week so far. And as you have rightly mentioned, that we were seeing a kind of initial bit of distribution earlier also. In fact, those who were sitting on losses in the stock and they wish to know where it might take a breather, the chart indicates closer to around 35.70, 35.80 could be the zone where it might take up either first. So we are closer to that mark. So again, means one should not look for shorting opportunity at current levels. In case if you are stuck, maintain that level as a stop loss and use any bounce to exit. So maybe closer to around 41, 4200 in case if it witnesses any short recovery. One should look for exiting position because at least for a short to medium term, the bias has turned negative in the stock.
Right, that's the word coming on Polycab. 20% cut is what we have. We will quickly take a look at what we do every day, and the last row of trade is taking a check of all the stocks that are moving on big volumes. Anushi joins us with the list. Anushi, what do you have on your list of volume buzzers today?
Right, so right at the top is Polycab India after with its volumes buzzing at about 22.5 times because of the unaccounted cash sales that the IT department has found of about 1,000 crore. Next on the list is Just Dial, which has reported about a 53% upside in just this 1 year, while its volumes today are buzzing at about 22 times. Then we have the likes of MRPL and Easy Trip Planners. Easy Trip Planners continues to be in focus with its volumes buzzing at 10 10 times. Then on the list also there is Jamna Autos. With Jamna Autos, it's seeing heavy volumes on the back of multiple large trades that has happened today. So that is there. And in the final one, we have KEI Industries, which is feeling some heat today with its volumes at about 8 times for today, but its stock price but hitting an intraday low of about 10% today. So these are the list of the volume buzzers for today.
For that, Anushi, a bunch of them are looking really good and gaining, or moving rather, on big volumes. In the meantime, a quick check of the markets before we slip into a break. The Nifty was looking a little bit threatened, if I may say, at higher levels. We're off the day's high point, only trading with a gain of 30 points now, if that's the chart. So we did dip briefly a few minutes ago, but recovering and staying around levels of 21,650. The breadth has also deteriorated, like we said, in the last few hours, but it's an afternoon of consolidation, an afternoon of being on the sidelines ahead of the big earnings. We'll take a break, we'll come back, but we'll talk to our guests and delve deeper into today's market movement, so stay tuned.
Right, welcome back. You're watching NDTV Profit, India market close, but HDFC AMC, we had Q3 numbers. We spoke about it at the start of this show. Now showing an uptick 3.5%+. Let me quickly go through the numbers for your benefit. 814 crore is where the revenue number has come in at. It's a 23% growth YOY. But what is really impressive is that the Bloomberg estimate pegged this number to be at 717 odd crore. So that jump with regard to almost 15%, coming in 15% higher versus what the Bloomberg estimate was, is what is leading to that spike in the stock, as you can see. With regard to both, net profit also was a beat. Revenue, of course, I did mention was quite a beat. And let me read out the net profit. It's come in at 490 crore versus 369 crore same time last year. 33% revenue growth. AMC stocks seem to be doing well. HDFC AMC has done very, very well, and even in comparison to its Bloomberg estimates, which pegged the number at roughly 470 odd crore. So that's where the Bloomberg number is at. We have the number at 490 crore. 452 crore, I beg your pardon, is the Bloomberg number versus the 490 crore number that it's come in at. So 10% higher even there. So strong set of numbers, Samina. You've been flagging these ones off since a while.
I've been actually quite excited about this space. And it's very obvious, right? If you look at the numbers, Hersh, the amount of equity info that you're getting into the markets, you look at BSE Star. Now, that is a platform where, you can do direct investments into mutual funds, and those have been at record highs as well. So the whole game of financialization, education, it has given a boost to investments in equity. You can invest in equities either through direct equity, like we've said, or of course from mutual funds. And HDFC particularly has seen a pretty good run for its equity funds. In fact, there was a report that came out on Monday, and if I'm not mistaken, it was a JP or a Jefferies report that said HDFC AMC is preferred, could be up for a re-rating. The numbers would be fantastic, and their funds have performed quite well in comparison to a UTI or an Aditya Birla. So those are the two other AMCs not expected to do as well as HDFC AMC. This one is the leader of the pack, and that's what is keeping the markets quite excited this afternoon. It's at the day's high point, looking good, 3% gains on the stock. But staying with earnings, you have the big daddies of the IT pack that will report numbers. We've got TCS and Infosys that we are eyeing. Tushar is standing by with more on those expectations. Tushar, it's expected to be a muted quarter for TCS and Infi both.
The bellwethers of Indian IT, TCS and Infosys, will declare the December quarter earnings today. While seasonality will be, of course, in play, the numbers may just be worse than expected. First up, let's take a look at TCS. A rare decline in revenue is likely due to furloughs, general slowdown in the IT sector, and lack of discretionary spending. There will be a positive impact of TCS BCA deal, but how much of that will offset the pain remains to be seen. TCV is in focus. For that will show how demand will shape up in the rest of 2024. The EBIT margin will be flat because operational efficiency will be offset by furloughs. Now, coming to Infosys, it will be more of the same like in the lines of TCS. Again, flat to negative growth due to, again, furloughs, general slowdown, and lack of discretionary spending. Again, there's a large deal that Infosys stuck in the last quarter that was of Danske Bank. The ramp-up of that deal may offset some of the pain. The EBIT margin, however, for Infosys will decline due to absence of margin levers. Remember, Infosys gave out wage hikes in the third quarter. Now, what to watch out for? Infosys gives a guidance. So any cut or status quo should set the tone for the rest of the year. We have to also watch out for the reasons for the cancellation of the $1.5 billion AI deal and whether that impact will spill over into other deals. All in, TCS and Infosys will set the tone for the rest of the IT pack. There will be outliers for sure, but there's a pervading sense of a slowdown that's likely to persist for longer.
Indeed, Tushar, and the markets are also, in fact, the stocks are looking a little nervous as well before TCS and Infi will report numbers. From the IT pack, HCL Tech is expected to beat its peers, but that stock too is trading quiet in today's session. We'll take a break, we'll come back, we'll discuss these counters and more with our guests, so stay tuned.
Welcome back. You're watching NDTV Profit. Thanks for staying tuned. We have Agam standing by to give us a breakdown on the FNQs for today. Agam, what is it that you have for our viewers?
Right. We were keeping an eye on the Nifty options weekly expiry. And while there was some amount of expectation with an increase in volatility, that really hasn't come to be. And in fact, we're looking at a relatively quiet one. For now, the Nifty is flat. We've not seen too much change in open interest, about a 3% increase in OI as far as your index futures go. And even in terms of the Bank Nifty futures, we are looking at a 9% increase, but even as the underlying remains flat. So we really can't tell as to whether or not these positions are being built towards longs or shorts. But let's take a look at the options market. And that's where the action has been in today's day of trade, considering it is the expiry. And, until yesterday, we were talking about the 300-point range between 21,500 on the lower end, denoted by max OI in puts. And on the higher end, it was 21,800. Denoted by max OI in calls. Let's talk about the change in OI in today. And, well, again, on expected lines, we saw a lot of writing around 21,600. And that's where we're likely to see expiry too. between 21,600 and 21,700 as far as the indication goes. Let's talk about stocks then. And in terms of stocks, Polycab is the big one, looking at a 20% decline with a 100% increase in open interest towards more shorts into the system. The question is, do we see about a short covering towards the last 15 minutes of trade today, or do we see a short covering tomorrow? Of course, we also have HDFC AMC, Gujarat Gas, Delta Corp, along with Hero MotoCorp, all of them looking at fresh longs building into the system. And as far as those stocks which saw unwinding in trade, well, about a short covering coming for Bajaj Auto, IDFC First, Coforge, Manappuram Finance, and Emphasis. All in all, turning out to be a reasonably good day of trade for the markets in general, as well as the advanced decline ratio, even in the futures and options space. And perhaps a good day for everyone who has sold options on the Nifty options expiry.
I wouldn't go as far as saying it's a good day. Now only 25 points higher on the index is what we have. So it's actually pretty much at the day's low point from where we started the day, of course. But, you know, Ajit, I'll come to you while we're taking trade calls as we get into the last 20-odd minutes of trade. How would you play TCS and Infosys ahead of numbers? Any strategy at all on either of these counters? Buy today, sell tomorrow, sell today, buy tomorrow, whatever you like.
Samina, though we are discussing that there could be further disappointment from the earning front, I feel that somehow we have discounted the kind of decline that we were seeing in both the IT majors, and we are still seeing this decline continuing in Infosys. I don't see any major slide from the current level, so maybe 5-6% kind of a cut, is possible in case if the number goes completely out of sync. But if you are an investor, then definitely one should look for buying opportunities on those dips. So I personally don't feel that speculating based before the numbers is a good idea, considering that we are already sitting on around the record highs, and there could be excessive volatility. But yes, I feel that the charts are indicating that downside seems capped in the IT majors. So instead, if it opens lower, maybe close to around 5-6%, both TCS and Infosys, one can look for investment perspective, but shorting at those levels is not recommended.
Right, Mr. Chokkalingam, I would love your views on the IT space as well. Of course, earnings are right around the corner. In fact, probably an hour away now. So, what's your sense with regard to Q3 as well as with regard to overall valuations? How are they looking for you?
I've been saying this for the last few years that wealth creation stories over in large IT stocks, because the industry is growing in a poor single digit in terms of dollar exports. That would continue maybe for another 3-4 quarters or 3-4 years. So one can play on IT stocks only for purpose of being defensive or nominal return. And I do expect below industry performance from Infosys. But in case the stock corrects, one can buy it post results, because it will be a good defensive stock. Otherwise, I would recommend a stock in a small cap segment where I find more opportunities in the IT space. One name I can share is that Explio Solutions. The stock has corrected a lot, and I believe this stock can be a potential alpha creator.
Ajit, are you tracking Hero MotoCorp? 5% higher. It's the top gainer on the index right now.
Yeah, that's right. In fact, the entire auto space, we are seeing consistent buying interest. So if you exclude a couple of names like Maruti, which is not participating in sync with the move, largely you see that all the auto majors, TVS, Hero MotoCorp, Eicher, they all are doing well. So Hero MotoCorp, after this move that we are seeing today, volume price action, this indicates that the bulls are completely under control, and as per the consolidation range, I won't be surprised that we see the stock inching towards 4550, 4600 levels first before seeing any meaningful profit taking. So yes, one can continue to hold longs. So 4270 should be your trailing stop if you are having any existing long position. You can buy fresh also with those levels.
Chokka, what do you think two-wheelers will do better in the auto pack ahead of numbers? We've seen those monthly sale numbers, which some may argue that were disappointing, but the stocks are seeming like they're in good spirit right now. Any auto names you'd buy before earnings?
Certainly, auto is the one sector which is doing very well. Of course, tractors are not doing well and the small cars are not doing well. but other segments are doing well. So one can continue to hold stock like Euro Motor Corp, and in other segments one can consider buying Maruti, and also one can continue to hold on M&M.
Right. Thank you so much for that, gentlemen. Let me go quickly across to one of the largest components of the Nifty, Reliance Industries. It's hit its life high of 2707 today. Now, both CLSA, JP Morgan, positive bullish stance on Reliance, but most importantly, we've seen a very solid move from Reliance both yesterday as well as today, contributing 56, 57 points yesterday and a similar set of points today as well to the Nifty, and contributing meaningfully to the Nifty. We have Mihika standing by to break up those two brokerage notes of CLSA and JP Morgan. Mihika, talk to us.
Yes, so Reliance has extended gains and it's reached its life high, and the stock is up 10% in the past month. Now, CLSA has maintained a buy rating on Reliance at a price target of 3,060 rupees, which implies a 19% upside to the previous close. Now, it expects organic and inorganic triggers to come in together in 2024. RIL has indicated the completion of its 5G rollout. So, any actual pickup in high ARPU air fiber subscribers will be a notable positive for the stock, and the potential tariff hikes that are expected, post-elections remain a credible trigger for the telecom companies as well. And the completion of the pan-India 5G rollout means that the net debt peaks in the first half of 2024, which has been a concern. The rising capex and the net debt have been concerns, so this would be a positive for the company. Furthermore, the Reliance has added a lot of new stores in 2023, and as they stabilize, it's going to drive unit profitability in 2024, and this was also seen in Q2 numbers, where there was a visible pick in the operating leverage after 5-quarter decline. Then we have JP Morgan, which has maintained an overweight at a target price of 2,810 rupees. Now, in terms of the third quarter preview, it will be a slightly weaker preview, but in line with the year-end estimates. It expects a 5% quarter-on-quarter decline in the earnings, mainly on the back of lower refinery margins in the O2C business, but the implied Q4 profits for both telecom and the retail business seem achievable, and the retail segment is they expect them to report revenue and EBITDA growth of 29 and 35% year on year, this will be mainly driven by festivities in the third quarter and the margin expansion. And they expect retail and telecom segments to account for 95% of the growth in EBITDA over the next 3 years. And finally, they do say that FY25 estimates could be upgraded if the retail growth continues to be in momentum. The tariff hikes that are expected actually do come in, and the 5G investments that the company has been making, the company is able to monetize on those investments.
Right. Thanks so much for that, Mihika. Let me go across to Mr. Chokkalingam. Sir, your view on the stock, quite a few factors with which Mihika highlighted with regard to CLSA as well as what JP Morgan believes. What's your sense? Is there still value left here? And what should investors do?
Yeah, certainly one investor should hold on. If there is a small correction also, one should buy. For the last 2 years, we have been saying that Reliance Industry, that is before demerger of Jio, at around 2,400 level, we have been saying that it should double in the next 3 to 4 years, because the Reliance is becoming a mini economy in itself, and also further potential is there from delocking value for the shareholders from mobile telecom as well as from the retail business. So therefore, one should continue to hold. If there is any small correction, one should buy Reliance Industries.
Right. So again, positive there. But Ajit, your views with regard to charts? We've seen a significant run up now.
So in fact, Hersh, it's been almost 2 years now that we are seeing Reliance coming out of this consolidation. So I feel it's just a beginning, considering that the broader range that we were trading in for almost like nearly 2 years was 2,025.50 on the higher side. So post this breakout, we have room towards 3,000, 3,050. That could be the first area of breather, and then positioning maybe close to around 3,300 mark. So if you are planning, let's say, for positional trade, then definitely one can even look at current levels with 2580 as a stop and 3,000 in the positional target.
Right. MRPL also is looking quite good, 20% high on that one. Chennai Petroleum is also having a good day. Chokka, there was a report as well that came out, I think, highlighting why some of these counters may still look good. Do you track beyond RIL, if you're just looking at the oil and gas pack, MRPL, Chennai Petroleum, anything on that?
I would rather prefer Oil India because it has got its own venture, Nummalinga Refinery Limited, where it is tripling the capacity from 3 million ton to 9 million ton, which is a big positive for the company. So I would prefer Oil India to Chennai Petroleum or MRPL.
Right. Ajit, do you track this one in the charts? MRPL is up 20%. Chennai Petroleum is not doing too badly either. I can even extend that conversation to include the likes of BPCL, HPCL. All of them are having a good day today. Any of these oil and gas stocks that you would trade on?
So MRPL, Chennai Petro, Samina, one thing which is we are seeing in common that these names were beaten down since ages, and reclaiming their record highs and post that maintaining this kind of momentum clearly shows that the overhang that we had means in the last several years we were seeing that for MRPL 120-25 being the upper band. So we are finally and decisively crossed that mark. So now we are seeing fresh banks, and after this move that we are seeing today, almost like 6 times of the average volume and the kind of price action, this momentum is likely to sustain. And but fresh buying, I would recommend to wait. Let's stop to witness any dip around 150, 145 area. Then one can look for fresh long position with 130 as a stop. And same hold true for Chennai Petro also. Similar kind of price action if you talk about on the monthly charts. But yes, it was among the top performing name, and it outperformed MRPL in the recent run. And the overall moves, it's largely in sync with the what we are seeing in the other names. So yes, you can hold this also with 785 as a stop, and the upside is open. So keep on trailing your stop losses on a very 4 to 5% kind of a rise.
Right. If I can go back to Mr. Chokkalingam, so your views with regard to some of these new age tech stocks, right? You have the likes of a Zomato, on the back of a positive note. In fact, HSBC has upped its target price from 140 to 150. Stock is up 2.8, and it's risen quite. The rise has been quite meteoric with regard to the last 1 year or so. If we can have that chart, that will also help. So it's been quite a solid rise. How should one play this one now going forward? You can see the 1 year chart there, all the way from 40s to 140 now. How should one play this in your view, and how do valuations look now?
I'm sorry, I would be the wrong person to talk on new age companies because I have an inherent bias. I may be wrong. I don't buy these kind of stocks unless they give me confidence that within 2-3 years, the bottom line will grow to the extent of shrinking the PE. So therefore, last 2-3 years, I've been avoiding almost all the stocks. Of course, in 2/3 of the stocks, our clients were happy to escape. But I would not recommend such stocks.
Sure. Ajit, any views that you have there, any preferences?
So one thing, Hersh, which we have been observing is that all these names that after the initial carnage, we have been seeing base formations from these names, and Zomato is among the top performing name in the last 6-8 months. And the kind of distribution that we had around 140 levels, it's trying to overcome that mark now. So this indicates that obviously since we are entering into the earnings season, so obviously it's going to be the biggest trigger that how the company is going to perform on the financial front. But as of now, it looks okay to us. Means if you are considering for short-term bets, with strict stop at 132, one can continue to look for long positions. And the record highs close to around 160-65 is something that one can wait for.
Chokka, we've got another 5-10 minutes to go, and I know it's always tough to ask for a fundamental call when it's short term, but tactically, any sort of positional trades you'd initiate, and I'm not talking more of this is not a strategic buy, anything on back of news, earnings maybe?
And tactically also, I would suggest stocks like Karur Vysya Bank, East India Hotel, Taj GBK. These are the 3 stocks because hotel industry is going to do very well in 2024 also. And Taj GVK Indian Hotel has a 25% stake. East India Hotel, ITC and Reliance Group together have 35%, when the core promoter family has only around 35%. And Karur Vysya Bank, both SBI Mutual Fund, ICICI Prudential Mutual Fund, they have got RBI approval to increase the stake to 10%. So there is a lot of scope to increase the stake by these two AMCs, which itself can tactically, give good upside for KVB. So these are the, apart from fundamentals, also based on the tactical possibilities, I would suggest to the investors these three stocks.
Ajit, what about you? Any trades for our viewers as we wrap up in the next few minutes?
Yeah, so at the beginning we talked about TVS and the other name Syngene, which we feel that one can continue to hold, and one can add AB Capital to that list, because now we are seeing almost 7-8 months of corrective phase ending, and today's price action combined with volumes, gives us the confirmation that the negativity that we were seeing in last several months, it's likely to overcome that mark, and in the near future, maybe around 190.95 could be the zone where it. So with stop at 175, one can look AB Capital alongside with the other two names.
Understood. Thanks so much for that. Let me quickly also move it back with regard to a couple of quick names that we can try and cover. One was the likes of a Bharti Airtel. Let me come to you, Ajit, first. We in fact had a favorable note coming in from Jefferies. But anything on the technical side that you are seeing in terms of that one? What are your views?
So it's a consistent performer within the telecom space, Hersh, and there was hardly any major correction even during the tough times, something that the stock has been witnessing for last several years. So that clearly shows the kind of outperformance that we are seeing in the stock within the telecom space. And but yeah, fresh buying, I would refrain, considering that this looks slightly stretched after this recent spell of up move from 960 to 1060 levels. So there's a possibility that we might see a dip towards 1040, 1030 area first before any meaningful up move. So if you are planning any fresh trade, then one should wait and let the stock witness some correction for fresh buying. But if you are a positional investor or means a long-term investor, you can continue to stay put.
And Mr. Chokkalingam, sir, your views, because the target price has been raised by Jefferies. We've heard that the company, at least over the last 6 to 8 months, we've heard consistently that it's reached an inflection point where EBITDA will expand substantially going forward. In fact, 50% EBITDA CAGR is what the expectation seems to be. Sir, your sense, do you see an outsized return going forward here?
Certainly, yes. Medium to long term, it can continue to give a good return for 4 reasons. One, we have seen the consolidation happening in the mobile telecom, which is always positive for the industry. That's what economics has proven. And second, it is a play on population growth, urbanization, and overall GDP growth, where India is a better position. And the third, tactically, interestingly, the government revenue also linked to the mobile telecom industry's revenue. In non-tax revenue segment, since the government is spending heavily on welfare of the people, obviously the government also would encourage very reasonable hike in the mobile tariff year after year. And fourth is, Bharti Airtel is doing in outside India also slightly better, except one country in Africa. So considering these 4 reasons, yes, one should hold on. In case it falls below 1,000, one can aggressively buy Bharti Airtel.
Interesting. And so any interesting NBFCs that you're looking at? Because we had a note which suggested that typically in a rate cut cycle, NBFCs do extremely well when it comes to returns. And, we're at the cusp of, I would suppose, at the cusp of a rate cut cycle. And therefore, NBFCs will come into focus fairly quickly because it'll help their bottom line. It'll aid their bottom line. Your views with regard to some interesting NBFCs you are seeing in terms of both valuations as well as the sector as a whole, do you have any views on that?
Certainly, you touched upon very interesting insight. Interest rate reversal would promote. But what has happened, which economics cannot provide answer, despite the rise of interest rate cycle in the last 2 years, the NBFC's banking sector credit growth bounced back substantially, which is a big surprise. So obviously, as we mentioned, when the interest rate falls, this again will get a further boost. But my only concern is that I find it very difficult to find any NBFC stock which is trading less than 3 times book value. So anything is available, definitely one can. But otherwise, still one wants to play for long term. One may, buy and hold some stocks like Sundaram Finance or Bajaj Finance.
Understood. Got it. Same question to you, Ajit. Any NBFCs which you are finding interesting on charts?
So, Hersh, Bajaj Finance is something that one can definitely look at. Why? Because almost more than 2 years now that we have been seeing the stock, hovering in this band, which is upper band around 1800 mark, and from the last almost 1 year we have been seeing higher highs formation, higher lows formation. So now we are very closer to the upper band of this consolidation range. So a decisive break above 1750 might prompt the next leg of the up move. The way we are seeing a move in Reliance is something that it might also witness. So yes, if somebody is looking for accumulation, the Bajaj Finance can be the one candidate that one can look at.
Right. Thank you so much for that, Ajit. We'll let you go on that note. Thank you so much, Chokkalingam sir. It's been a pleasure interacting with you and for all your views. But we're very close to market close. So let's take a quick look at where we are just before we close. Around a 1/5% in terms of gains. Not a bad day at all. Largely, if we can have the heat map, it's largely led by gains made by Reliance. And that is probably one of the top constituents or top contributories with regard to gains in trade today. But you had the likes of a Hero Moto move 4.7%, Bajaj Auto also moving roughly 3.5%. So the two-wheeler pack leading the race within the Nifty 50 basket. Among the ones at the bottom, you have Infosys, which is set to declare earnings today. You have HUL, which continues to languish, was languishing earlier this week as well. You have the likes of a Nestle, which is also languishing. Sun Pharma down around 1% or thereabouts. Among the other interesting names, you have the likes of a Power Grid and Ultratech, BPCL all gaining 1.5%. Very interesting that Power Grid and BPCL, both PSUs, gaining 1.5% in trade. Largely no activity coming in from some of the pharma majors like Divis. You also had the likes of an ITC, which is doing very little in trade today. But that's where we're at. I'll quickly switch over to the advanced decline ratio to try and gauge as to where we are with regard to the broader markets as well. And there you go, you're in favor of the advances. 1.5:1 is currently where the rough ratio seems to be at. And let's quickly focus on the Nifty mid cap and small cap indices, the broader markets. The Nifty mid cap, doing better than the Nifty 50 clearly. You're up around 0.4%. The small cap index also outperforming the benchmark, up around 0.3% or thereabouts. So you're seeing positivity on both of those counts. Also, if we can have a look at where we are, where the sectoral indices are concerned, and there you go. You have the Nifty Energy trading higher. But I want to try and focus on Nifty Realty. Markets have closed as we speak, but I want to focus on the Nifty Realty because that has been on quite a run, but down around 0.25% or thereabout. Nifty Media has been in focus this week as well. We've seen how it's gained yesterday in trade, but now we're seeing a cut of roughly 0.5% on the Nifty Media today. But outside of that, Nifty Auto 1%, significant set of gains. If we can have a breakdown of that, see what's contributed to those gains, and you'll see the likes of a Hero, Bajaj lead the pack there. TVS also doing fairly well, 3% higher in trade. Maruti absolutely flat as it gets. And you had the likes of a Sona BLW, which is down 1%. So that one, pulling the Nifty Auto just a wee bit. If we can also have the Nifty Pharma, and the Nifty IT rather, because those two will also be in focus. Pharma, you see the likes of a Torrent Pharma. It's a mixed bag where the pharma pack is concerned. But if we can have the Nifty IT, because Infosys was a laggard here, Wipro is down roughly 1% or thereabouts. Infosys actually has closed flat, absolutely flat in trade. You have the likes of a TCS also up around 1/3% or thereabouts. and you had the likes of a Tech Mahindra and Coforge lead the pack. So that's where we are at, where markets are concerned. The Nifty itself has closed in the green, so that's a positive. But that's all that we have on India market close for you. But we'll leave you with a bite from A. Bala with regard to markets. For now, it's a goodbye from Samina, me, and everyone who puts the show together.
So I think first and foremost, good news for the industry, crossing 50 lakh crore size. And we as a mutual fund have been there for 30 years in the mutual industry. We're very quite happy that we have crossed 3 lakh 20,000 crore assets under management. So it's something, a reflection of the recognition of the mutual fund industry's importance that it can play in the life of investors as well as in the capital market in general. So I see this growth momentum that we have built the last few years will continue, and finalization in the industry will continue to be one of the big mantra for India as a country. And you'll also see more and more people who have been sitting on the fence and not been exposed to the mutual fund per se may also begin to participate through the SIP's route in the mutual fund industry. Therefore, I see this growth momentum for the industry will need to pick up. The way I also see is the last 30 years, I think each 10-year period, if you see, the rate of growth was different. And as the time progresses further, the rate of growth has always been far faster. Therefore, I would probably say the next decade will be more faster than what you have seen in the last 30 years.